Uh, but the average impact have been roughly 10% for all banks. On top of that, Imran will dwell more into it, and there was also an imposition of MDR during this period, which also has an impact on the profitability of Meezan Bank and all other Islamic banks. But that impact is to a great extent managed and neutralized through growth in deposits by Meezan Bank. And in the coming slides, Imran will take you through that. Two more highlights for this half year is that the total asset of the bank have crossed 4 trillion, so which is a definitely a landmark or a benchmark for us. And the total deposit of the bank has also crossed 3 trillion mark. So these two numbers are definitely new chapters in the successful journey of Meezan Bank, and we are still aiming to continue on this growth trajectory, and you will see much higher numbers in coming years, inshallah. So return on equity has declined, but it's a combination of two things. Although there is a slight decline in profitability, but definitely during the last couple of years when the entire banking industry and specifically Meezan Bank experienced very healthy profits, we were building our muscles and we are building our capital base. So due to increase in average equity, the return on equity has gone down, but still it is much higher than the market expectation in terms of return on equity on securities traded on stock exchange. So as a result of that, Meezan Bank has also experienced stellar growth in its stock prices, and thanks to the entire community for supporting that. Branches are roughly 1,057 as of December 2024. These will be up to roughly 1111 by the end of this year, because there are certain branches which are in the process of opening, and most of the branches open during the second half of the calendar year. Meezan Bank has been following a consistent dividend strategy, and we have distributed 7 rupees again in the second half year. In the first quarter, second quarter of the half year, in the first quarter, we also distributed 7 rupees. So overall distribution is 140% in cash. So these are some of the recognitions of Meezan Bank. So pretty much every other important organization in the world is recognizing Meezan Bank's performance. So you can see both local institutions and international institutions of high repute recognizing Meezan Bank. But I would like to highlight the recognition from Pakistan Banking Award, which we believe in the Pakistani banking context is one of the most prestigious award. And Alhamdulillah, Meezan Bank has won it for 4 times. So which is a very good, I would say, performance or recognition of Meezan Bank, because no other bank has been able to get such recognition for 4 times. And we look forward in future as well to continue working hard, but we work harder for our customers and our shareholders, not honestly only to win awards. So these awards come in our way as a byproduct of your support, the board guidance and the management guidance and the employees' hard work and the customer support definitely. CFA Society, this is also very relevant for this forum. So we have been recognized as the best bank in large size bank category for 5 consecutive years. And so this is a big one. We have always been recognized as the best Islamic bank. We have also been recognized as the best digital banking service award by CFA Association, which is again a big one, and which is definitely because of the significant footprint which Meezan has in handling transactions digitally. So in the commercial banking space, the number of transactions handled by any bank, Meezan Bank, is Alhamdulillah by far the largest in handling the number of transactions through digital channels. So from the next slide, I would request Imran to take you through the financial performance of Meezan Bank. for this quarter and the entire half year. And then at the end of this presentation, Imran and Irfan Sahab will be available and will be very happy to answer your questions. Thank you, Imran. Over to you.
Thank you, Amir Saab. Bismillahirrahmanirrahim. Assalamu alaikum, everyone, and a very warm welcome to the corporate briefing session of Meezan Bank. As Sayyid Amir Ali had mentioned, profit after tax has declined by roughly 5.2 billion or around 10% compared to June 2024. However, this was expected in line with the policy rate decline. We'll cover this in more detail in later slides. Cost to income ratio has improved from 29.2% to 25.6%. This is primarily being driven by some one-off reversals of variable compensation expenses, whereas our return on equity has declined from 52.6% to 36.4%, driven by improving equity base as well as obviously reduced income in line with the policy rate decline. Deposits, alhamdulillah, have shown excellent growth of 18% compared to December, and this is being driven by a 25% growth in current accounts in just a period of 6 months. Our CASA deposits have also increased by 19% or roughly 454 billion, whereas CASA mix has improved further from 93 to 94% over the last 6 months. Gross financings since December have declined by 367 billion or roughly 24%. There were two reasons for this. The main reason was that short-term structured transactions and one-off financings that we had done before the end of the year have tapered off now. The other reason is that we have been able to channel excess liquidity towards our investments book, which has increased by roughly 520 billion or 28% over the last 6 months. NPL ratio has gone up from 1.6% to 2.5%. However, we remain very comfortable here, and the main reason for this increase in NPL ratio is the decline in the gross financing rather than any stress that we might be seeing in specific sectors. NPL coverage ratio remains at a comfortable 149%, which is one of the highest in the industry. Looking at some of the details in terms of our profitability, the main driver of the decline in profit after tax is obviously the net spread earned, excuse me, which has declined by 9%. In terms of the reasons for the decline in net spread, roughly the impact of the decline in the policy rate as well as the imposition of the minimum deposit rate on Islamic banking institutions was around 55 billion. And we have been able to mitigate that impact through volumetric growth in our deposit and investments portfolio, and the volume impact has been roughly 43%. So on a net basis, the net spread earned has gone down by 12%. Fee, commission and other income, despite all the challenges, have shown an uptick of 15%, whereas foreign exchange income has shown robust growth, increasing from 580 million to more than 3.2 billion rupees over the last 6 months. Capital gains were realized to the tune of 669 million versus 115 million last year, and other income also had an uptick of 21%. Operating expenses and other charges have gone down from 43.6 billion to 36 billion. However, this includes a one-off reversal of excess variable compensation expense relating to prior years of around 10.9 billion. We do not expect any significant further reversals going forward. And in a normalized situation, the current run rate can be assumed to continue. Profit before tax has gone down by 4%, whereas profit after tax year over year is down 10%. on the back of higher taxes being applicable on the banking industry. If you remember, last year we were accruing tax at 49%, whereas this year the tax rate has increased to 53%. In terms of the quarter-over-quarter comparison, our profit after tax is up 9%, whereas net spread earned is up 4% versus last quarter. The main driver of the net spread earned, despite the decline in the average policy rate, is the volumetric growth in our average deposits, which have increased by more than 200 billion, primarily being driven by current accounts. Operating expenses and other charges are down 15%. Again, I've mentioned the reason for this, which is the one-off reversal, and the profit before tax was up 11%. I would also like to highlight the robust growth that the bank has been demonstrating over the last few years. If you look at our 3-year CAGR growth in profit after tax, it stands at a very healthy and market-leading 37%. And inshallah, we hope to continue the long-term growth in our profit after tax trajectory going forward as well. And this is despite the tax rates increasing from 39% being applicable in 2021 to now at 53% and going down to 52% next year. In terms of the balance sheet, our total assets have increased by 26% year over year, and we have crossed the milestone of total assets of 4.1 trillion. The major contributor of the increase in our asset base was the investments portfolio, which is up 45% versus June last year and 28% versus December. Whereas on the liability side, deposits have grown by 26% year over year and 18% compared to December. Our equity base has also improved by 27% versus June and currently stands at 264.4 billion. We continue to maintain a healthy ROE above the 35% mark. And inshallah, going forward, we would continue to target an ROE north of 30%, whereas our ROA currently is at 2.3%, and we would expect and inshallah strive to maintain it at more than 2%. Cost to income ratio has declined to 25.6%, as I had mentioned previously. However, excluding the impact of the one-off reversal, the cost to income ratio is around 33%, and we would expect it to normalize around the 35 to 40% mark going forward. I think I'd already mentioned deposits. Mashallah, deposit franchise has grown by 600 billion year over year. And the main driver here is the current account, which is up 36% year over year and 25% versus December 2024. Saving accounts are also up 26% year over year, whereas our CASA deposits are up 31% compared to June last year and around 19% compared to December. I would also like to highlight that retail depositors constitute the backbone of our deposit franchise, contributing 70% of total deposits, whereas private sector deposits constitute around 27% of the total deposit mix. In terms of the investments portfolio, our total investment portfolio stood at around 2.4 trillion at the end of June 2025. Of this, around 2.1 trillion was in GOP Ijara Sukuk. 81% of the GOP Ijara Sukuk are in variable rate instruments with an average yield of around 11.5%. Whereas roughly 20% of the portfolio is concentrated in fixed rate sukuk with a yield of around 12.1%. I think we've already covered the financing and the LPL ratio. However, I would also like to mention that the bank continues to carry a general provision over and above the IFRS 9 requirements of 13.6 billion. In terms of the financing portfolio composition, roughly 74% of our portfolio is in top-rated blue chip companies. Around 17% is in mid-market and SME clients, and roughly 8% of the portfolio is in consumer financing products, i.e., car, ijara, and home mortgages. Capital adequacy ratio stands at a very healthy 23.6%. However, this does not include the updation of the operational risk charge, which only is included in the calculation at the end of the year. But if that theoretic number was to be included in June numbers, then our capital adequacy ratio would still have been above 22%. In terms of the major contributors of the growth in fee, commission, and other income, debit card related fees was up 5%. Trade related fees and commissions were up 23% versus same period last year, whereas branch banking customer fees was up 13% versus corresponding period last year. The other items of note was investment banking related income, which was up 111% versus last year, which shows that the activity is now returning to the market. And the commission on guarantees were also up by 78% versus corresponding period last year. Trade volumes have increased by 200 million rupees, or roughly $700 million, going from 1.2 trillion to 1.4 trillion at the half-year mark. Over the same period, our home remittance volumes have also shown robust growth, increasing from around 470 million to more than 1.2 billion US dollars. Alhamdulillah, Al Meezan Investment Management, which is our subsidiary, also continues to outperform the market. AUMs have increased by 17% versus June, and the half-year PAT was 1.5 billion with a return on equity of 56.5%. Coming to our digital footprint, our total cards portfolio stood at 4.2 million outstanding cards. This is against a total customer base of around 5.6 million, whereas POS machine deployment is also progressing, and we have added close to 9,000 POS machines over the last 12 months. Our mobile app active users also continue to expand and currently stand at 2.81 million active users, up by close to 700,000 active users compared to the same period last year. Total digital throughput stood at 17.36 trillion for the half-year mark, whereas nearly 43 million transactions were conducted through our POS and e-commerce transaction gateways. Digitalization percentage also remains healthily above 90% target and stood at 93.34% at the end of June this year. That brings us to the end of my presentation, and now we'll be happy to take any questions you might have.
Thank you, Sir. Thank you very much. May I remind the participants once again that if you have a question, kindly raise your hands and we take the questions one by one. We have a question from Syed Fawad Bashir. Jifar, kindly go ahead, please.
Assalamu alaikum everyone. Congratulations on a great set of results. I just have two questions. One is pertaining to the asset repricing lag that we always see in the banking sector. In terms of Meezan, how much of a lag is left now that the policy rate has been 11%? How much time? It's usually 3 to 6 months depending on various portfolios, but how much of a lag is left now?
Okay, thank you, Fawad. That's an interesting question. So if you look at our investment portfolio, roughly 80% of our variable sukuk, roughly 80% of our total portfolio is in variable rate sukuk, which is currently yielding 11.5%. And the majority of those sukuk would reprice in October, November this year. So we would expect our average yield to decline if the policy rate was to remain at current levels by 60 to 70 basis points at the end of Q4 and at the end of Q3 and early Q4. Obviously, the yield on the fixed rate portfolio remains the same throughout the duration of the investment.
Right. And just one more question. This pertains to the loan book of the bank. Obviously, we've seen with the regulation change over the past 6 months that there was a surge in the book, and now it's on a declining trend again. We've seen a lot of banks book reversals, but I see second quarter saw a charge in your credit allowances, right? And is there any specific headwinds that you're seeing of a particular sector, or is just a normal charge to maintain your, let's say, 149% coverage ratio?
So we as our being prudent is in our DNA, and some of the provisions that you have seen have been booked on the basis of abundant caution. We had seen some stress in the textile sector on the back of the tariffs that were announced by the US administration. However, we hope and expect that as those discussions progress and those tariffs are revised downwards further from 19%, which was last communicated, then this sector should also show some improvement. However, on the basis of abundant caution, we have booked some provisions. And as I'd mentioned previously, we remain quite optimistic that we'll be able to maintain our NPL ratio at current levels or below the 2% mark once we see growth returning to our financing book.
All right. That's it for me, sir. Thank you.
Thank you. The next question is by Mr. Abbas Khan of DGM Securities. Abbas, kindly unmute yourself. Please go ahead, sir. Abbas Khan, sir. So I think there was some problem at Abbas Khan's end. We have a question by Shankar Tereja. Shankar sir, please go ahead. If you could introduce yourself first, please, sir, and then ask the question. Thank you so much, sir.
Okay, so my name is Shankar. I'm from Topline Securities. So my question is on overall deposit side. So we just saw recently that deposits coming down by 1.2 to 1.3 trillion rupees in last 2 months. And in first half, we saw a few banks having much higher growth and some muted growth. So how do you see this trend going forward, and why is the recent decline in overall industry deposits?
Thank you, Shankar, for the question. So if you look at the market deposits, we saw a significant increase in market deposits, which went up from 32 trillion to more than 35 trillion over a span of 2 weeks at the end of June. Since then, as you have rightly mentioned, those market deposits have tapered down as that money would have gone back into government securities. However, in terms of Meezan Bank, our averages track very close to our period end reported deposits, and our current total deposits are also in excess of 3 trillion.
Thank you. Thank you. We have a question by Mr. James. Mr. James, kindly unmute yourself, sir. Introduce yourself and please ask the question. Go ahead, sir.
Yeah, thanks very much, James Bannon here, Coeli Asset Management. Can you just help us understand the demand or the environment for loan demand at the moment, or financing, as you call it? I mean, interest rates have come down by this 9-10 percentage points, but if you look June on June, it's only, the loan book is up 2%, which is, of course, well below nominal rate. So it indicates a pretty weak loan demand environment still. Can you help us understand that a bit, please?
So, Amir Sir, would you like to take that?
So, yes, interest rates have come down, and of course, the cost of debt capital is a variable which leads to growth in private sector demand for credit. But one thing which has happened, because Pakistan economy is trying to recover for quite some time, and the recovery is not just on the GDP growth side, it's primarily on the monetary management side and the current account side and the fiscal side. So since the regulatory bodies are trying to balance those, so as a result of a balancing act in ensuring that there should be a surplus in current account or a square current account. Luckily, we had a surplus of over $2 billion in current account. But to to have this stability, the growth in the economy has slowed down. So if you look at the GDP growth numbers, for last year it was roughly 2.7%, and year before that it was 2.5%. So GDP growth for a country where population is growing by roughly 2.2 to 2.5% is very low. And on top of that, if you look at the large scale manufacturing growth for 2024-2025, there was a contraction of 0.74%. So the demand for private sector credit has not yet picked up. So as a result of that, the financing or the loan books of the banks are not growing. And your comparison with the June 2024 number is right, because in the December 2024 number, there was an accelerated financing exercise by banks to avoid ADR. So if you compare even with the June 2025 number, so the June 2025 number with the June 2024 number, during that 2024-2025 fiscal year, because Pakistan government runs on a July to June basis, the LSM growth was minus 7.4%. So there is a very limited demand for private sector credit to date. And the situation even today is very similar, although only 1.5 to 2 months has gone by in this new fiscal year. But situation is still pretty much same, and the demand for private sector credit is low. The overall demand for private sector credit in Pakistan is also very low, which is roughly 11.5%. And if you compare with other countries, I'm not talking about developed countries, even if you go to next door neighbor of Pakistan, it's over 50%. If you just go to Bangladesh, it is roughly 39-40%. So our private sector credit to GDP is low. The LSM growth is low, but there is a possibility that it will pick up following the reduction in policy rate.
Thank you very much, Ansar. We don't have any further raised hands, but we have quite a few questions on chat. So we have another question by Mr. Abbas Khan of DGM Securities. Yes, Mr. Abbas, please go ahead, sir. Abbas, I have unmuted you, so kindly ask your question, please. Okay, so maybe there's some technical issue at Mr. Abbas' end. What we'll do now is we go to the questions on chat. The first set of questions is from Mr. Wasim of NBP Funds. The first question is, since the decline in profitability was lower than industry expectations, and your capital adequacy ratios are quite comfortable with ample room in CAR, should we expect dividends to grow in the next quarters? And Amisab and
let me try to answer. So yes, your point with reference to capital adequacy ratio is relevant, and the capital adequacy ratio for Meezan Bank and many other banks have gone up, not because on the basis of forward-looking profitability, but during the higher interest rate era, all the banks earn higher profit. And this is a global phenomena for banking. It's empirically proven. when your interest rates are high, the bank's profits are high. So our profits were higher, and these profits were retained primarily to support the capital base, and as a result of that, now we are experiencing a higher capital adequacy ratio. But side by side, the bank is also aiming to grow at a higher rate. So that capital will be consumed over a period of time. At this point in time, the bank has a strategy of distributing 7 rupees per quarter. So at this point in time, and the market is also expecting the same. So I can tell you at this point in time, we intend to continue with the similar pattern unless the board of the bank decides to change the dividend strategy of the bank. But distributing prior year's profit, which have been conserved during those periods to support the growth, maybe a little aggressive strategy. Some banks do follow it, or even some companies do follow it. But as you know, Meezan Bank is a bank which looks into the future, looks for a consistent performance rather than few blips here and there. So this is the reason we are trying to follow this pattern.
Thank you,
And
sir.
I would also
Uh,
like to add to those comments that Wasim, if you look at our financing portfolio, which James had also earlier alluded to, it has declined from a high of 1.55 trillion at the end of December to around 1.2 trillion. But we are hopeful that there would be healthy growth coming in our private sector credit portfolio, which obviously would eat into our CAR. So we would expect our CAR to go down as the financing portfolio ramps up, which is why we obviously have to conserve our capital.
Thank you, Nasab and Amir, sir. Mr. Wasim has a few more questions. I take them one by one. The next question is, how much of the investment book is fixed? What is the yield along with WAA? And there's a question related to this, Wasim Saab, is what is the outlook on net spread and any further decline expected, or have they already bottomed out? Imran Saab,
So in terms of
would you like to take this?
Yeah, so in terms of the first question around the investment book and the yield, I think I've already answered that question. The second question is the expected deposit growth by December 2025 and 2026. I think it would be very difficult to predict the deposit growth going forward because we have already been able to demonstrate a 18% growth in the first 6 months of the fiscal year. However, with the regulatory change in terms of the ADR tax being now withdrawn, the bank can continue to focus on core current and saving account deposit growth, inshallah, going forward. And I would expect the deposits growth to continue above 20% in the foreseeable future.
Thank you, sir. Two more questions by Mr. Wasim. One is, what is your expected deposit growth by December 25 and 26? And what is your target cost to income ratio?
So I think I've already spoken about the target.
You have, yes.
The expected cost to income ratio would be on a forward-looking basis between the 35 to 40% mark.
Thank you. We have questions by Saeed Murtaza Hassan. Some of them have already been answered. One is guidance on branch growth for the remaining calendar year.
So let me answer the,
yeah,
I think this has already been alluded to by the DCO.
Yes,
we are looking to basically close this year close to 1,100 branches. And going forward as well, we would continue focusing on branch growth in areas where either Meezan Bank does not have a presence or where we want to deepen our relationships. So aggressive deposit mobilization as well as branch growth would continue now that the ADR tax is behind us.
Thank you, sir. One question is, what impact can we expect on the bank's remittance-related fee income following the reinstatement of the government's remittance subsidy program and change in incentive structure by SPP?
So let me try to pick it up. So recently, central bank has changed the subsidy or the rebate mechanism. So now you have to understand Pakistan works on a free send model for worker remittance, which means when the sender visits a branch of a MTO or go to the application of the MTO, mobile application, the MTO waives off any commission or service fee in anticipation that it will be reimbursed by banks in Pakistan. So there is a concept of 20 reals per $200 per transaction kind of a thing, which earlier was slightly higher. So it has been rationalized. So we were passing that on in the earlier periods to the MTOs. We are continuing with the same practice. Plus, MTO also expect us to work with them on market development in different areas, and we support them in the form of promotion and marketing expenses, runs campaigns. So, although we expect that the home remittance number will continue to remain healthy going forward, but there will be very limited remittance related fee income which will be retained by the bank. Most of it which the banks get will be spent. There will be remittance fee income in the form of other type of remittances, which are not falling under the category of home or worker remittances.
Thank you, sir. Thank you, sir. We have a raised hand by Mr. Mohammed Uzaifa. Uzaifa sir, please go ahead, sir.
Assalamu alaikum. Sir, do you have any plans for stock split? Can you please share some regarding?
Yeah. So let me try to answer that. I think this is a favorite topic of the capital market analysts these days because some of the organizations either have done it or contemplating it. I would say at this point in time, we are not contemplating any stock split. And we are not also very clear about the true benefits proven by empirical evidence on a long-term basis for having a stock split. But still, this is something which is right now in the financial markets of Pakistan. So let's see how the situation evolves and develops and how the stakeholders and the shareholders of Meezan Bank looks at it going forward. But at this point in time, we are not contemplating any stock split.
Thank you, sir. We have a few questions by Mr. Waleed Rathore of Maple Leaf Summit. His first question has pretty much been answered due to the CFO's presentation. His second question is in an earlier briefing, you had mentioned the target ADR to be around 50% in 2025. With the current ADR being considerably lower than the target, at what level does the bank sees its year-end ADR now?
So let me also try to answer that. Yes, our target ADR is 50%. We are still targeting it at 50%, although we are experiencing better growth in our deposits than we were targeting earlier. So it may slightly fall behind our target of 50%, but our assets team are still working very actively and they are trying to book assets because at Meezan Bank, we feel that this is something which we are here to do and we will continue to do. And we have been good in doing that. So, but definitely, as I mentioned earlier, the issue related to LSM growth, GDP growth, private sector credit at a percentage of GDP, these are all macroeconomic national issues. But still, our target is 50% and we'll try to come pretty close to it by the end of the year.
Thank you, sir. We have a few questions by Sunny Kumar, and some of them have already been answered during our discussion. One question is that peer banks have now shifted to operating their branches 24/6. How do you see this shift impacting Meezan Bank's deposit growth? And his next question is, can you comment on any major repricing expected in second half 2025?
So let me pick up the answer about operating hours for branches. So naturally, we also remember an era when banking used to be 9 to probably 1 p.m., around 1 p.m. And now we experience branches servicing customers from 9 a.m. to 5 p.m. pretty much every day, even more than that. A lot of branches of banks, including Meezan Bank, are open on Saturdays where there is a demand. So now there is a talk about or a practice which has started having Sunday branches opening on Sundays, branches working on 24 hours basis. So I think we have evaluated the situation, and we are planning to offer branch banking services in selected markets, because in Pakistan still there are few markets which follow Friday as a holiday and Sunday as a working day. So we'll try to offer banking services on Sundays in those markets. Then there are very few markets, mostly like vegetable markets, where the business hours are pretty much 24/7, because the stocks of vegetables and fruits arrives around or even before Fajr time. So we are contemplating that we should offer banking services in very select of these branches on during those hours also. But our strategy will be balanced. It will not follow a herd behavior that somebody has done it, so we have to do it. We will follow a balanced strategy based on need and demands of the market. And we have in the past have tried doing 8 to 8 banking, 10 to 10 banking, 9 to 9 banking, and even a lot of our branches still do banking till 7 p.m. without any formal announcement. So our target is to service our clients. And I would say that because we are getting ourselves aligned with the new or the developing market practices, so we don't see any negative impact on Meezan Bank's deposit growth.
Thank you, sir. We have a raised hand by Mr. Abbas of DJM. Abbas, sir, kindly go ahead, sir. Abbas, sir, I have asked you to unmute. Kindly go ahead, sir. Please go ahead with your question. But I think the next question is Mr. Mohammed Suhail of Topline Securities. So, sir, kindly go ahead, sir.
Thank you very much. And again, thank you for a great presentation. I think Amir and team, you have been seeing some bank strategy has been very aggressive on raising current account, and the banking timing you are mentioning is a result of that aggression. The similar aggression, what we are hearing and what we are seeing on the social media is HR policies. So the bank, which has been very aggressive, they are compensating their branch manager aggressively on raising current account, and we have seen that they have been successful so far. So whether the HR department or the HR board committee thinking on tailoring the compensation policies to motivate branch managers to get more deposit and low cost deposit, or you think that again this is a one-time blip, or this may not sustain?
So let me thank you for asking this very strategic and both operational question. So Meezan Bank has been following this strategy for decades. So Meezan Bank's variable compensation has always been very good. It's still very, very good. Meezan Bank has a culture of running deposit campaigns, sometimes focused only on current accounts, sometimes focused on a combination of current and saving accounts. And this is a regular feature which we follow at Meezan Bank. And if you see even the growth in current account for the first half, it is 25% for Meezan Bank. So our growth is stable. It's very robust year on year. Our campaigns are tailor-made, and they are helping us to motivate our teams, and they remain motivated. So I don't see a need for a significant shift in what we are doing in terms of incentivizing the efforts of our branch banking team in mobilizing deposits. But we will continue to follow this same strategy, which is working for us for decades. Now, since some banks are replicating it, So for the financial markets, it is coming up as something new which is being done. But this is Meezan Bank is doing for almost 2 decades.
Thank you, sir.
Sohail, I just like to add to what Amir has said in response to Sohail's question. Like Amir said that, we've been doing this for forever, so to say. But Alhamdulillah, what we found is that our team is a very devoted and loyal team, to use that word. And, our variable comp has always been at a reasonable level. So we feel that we shouldn't like just alter our course for uh, sake of what people are doing in the market, and I don't see any worrisome position for the bank in the foreseeable future. I mean, if we do see any um, um, you know um, worrisome situation, obviously we have the capacity to enhance wherever we would like to. So I don't think we have a problem on that side. Thank you.
Thank you, Fansal. Mr. Abbas, kindly unmute yourself, sir, and please go ahead with the question. I think there's some technical issue at Mr. Abbas's end. We have a question by Mr. Muhammad Hanif. Hanif sir, please go ahead, sir. Okay, so I think we have Mr. Suhail.
Assalamualaikum. Hello. Assalamualaikum. Do you hear me?
Yes, Mr. Hanif.
My name is Muhammad Hanif. First, I'm sitting to Islamic Banking Pioneer One is Mr. Irfan Siddiqui Saab and Mr. Amir. So very warm welcome to my side. और मुबारकबाद के मुझसे कि आमिर के उन्होंने इरफान सिद्दीकी साहब ने पहले ही डिस्क्लोज कर दिया कि नेक्स्ट यू विल बी, तो बहुत मुबारक हो आपको। अच्छा, मेरा सवाल छोटा सा है कि आपने जो नेट अर्न किया है वो उसमें इंक्रीज है 16%, लेकिन एक्सपेंड आपका जो है 25% है, जिससे आपकी प्रॉफिटेबिलिटी को डिक्रीज किया है। तो मुझे एक्सप्लेन बाय। हेलो
हनी साहब, थोड़ा अपना सवाल समझाएंगे दोबारा से आप प्लीज?
सर, मेरा छोटा सा सवाल है वो ये कि आपने जो आपका एक्सपेंड है मार्कअप, नेट मार्कअप एक्सपेंड है वो 25% इंक्रीज है, अर्न जो है आपका वो 16% है, तो ये 9% का गैप है। तो क्या आपने जो बोरिंग की है वो हाई परसेंटेज पे की है क्या?
इमरान सर, वुड यू लाइक टू अटेम्प्ट दैट क्वेश्चन सर? इमरान साहब, आप म्यूटेड है। इमरान साहब,
इमरान म्यूट पे हैं आप।
जी, आवाज आ रही है?
जी
जी आ रही है।
अच्छा, देखें इसके अंदर हनीफ साहब, अगर आप रिटर्न ऑन डिपॉजिट्स एंड अदर ड्यूज एक्सपेंस देखें तो यू हैव राइटली पॉइंटेड आउट कि दैट हैज डिक्लाइंड बाय 25%, whereas the return on financing has gone down by 16%. The reason why return on financing has gone down by only 16% is because यहाँ पर हमने अपनी जो बोरोइंग्स हैं वो भी अगेंस्ट बजट जो है उसको हमने बढ़ाया है। So obviously that is at high cost, which is why our return on financings have declined by 16%. लेकिन जो रिटर्न ऑन डिपॉजिटर्स है वो हम क्योंकि करंट अकाउंट में ज़्यादा ग्रोथ लेकर आए हैं, इसलिए आपकी कॉस्ट ऑफ डिपॉजिट और कॉस्ट ऑफ फंड जो है वो ज़्यादा डिक्रीज हुई है। सो जो ग्रोथ आपकी जीरो कॉस्ट और लो कॉस्ट डिपॉजिट से आ रही है, बिकॉज वो ज़्यादा आ रही है, इस वजह से आपका रिटर्न जो आप दे रहे हैं वो कॉस्ट ऑफ फंड्स कम हो रहा है, which is why that's the differential.
अच्छा, और मेरी तरफ से मेरी आवाज आ रही है सर क्लियर?
जी आ रही है।
आमिर को मुबारक हो एक दफा फिर। ये मुझे मुबारकबाद दिसंबर में देनी थी, लेकिन मैं इरफान साहब की वजह से आज दे रहा हूँ। इरफान साहब, थैंक यू वेरी मच डिस्क्लोज दिस बार। थैंक यू।
Thank you so much.
Mr. Suhail of Topline Securities has a question. Suhail sir, please.
In continuation, so any idea how much a typical branch manager gets in fixed compensation and in variable compensation? As you said that you have been following this since last 2 decades. because recently we have seen a couple of banks paying larger portion of compensation as variable. So this was my earlier question in continuation. The second is, what's the status of you guys who are one of the few pioneers who started employee stock option scheme? So what's the update on that? How much shares have been issued, and are you thinking to enhance that scheme to motivate people? So what's update on the ESOP also? Thank you.
So let me try to answer, and Imran can fill in it if any numbers are needed. So for a branch manager which is achieving its targets, and we also run a concept of an aspiration which is generally set above the target level. So the branch manager, in addition to the fixed remuneration, is entitled for two things. One is the performance bonus, and the other one is the incentive on deposit based on the campaigns which we run. So for a good branch manager, he is able to earn more than his annual gross salary in the form of performance bonus and incentives at Meezan Bank. And a lot of branch managers are able to get there. Now, the other question which you asked, one was about the branch manager's incentive scheme, and I think other one was about
ESOP. ESOP.
ESOP. So the ESOP scheme, there was an allocation of 5% of the share capital, because of course issuance of new shares lead to dilution of your existing sponsor shareholder. So there was an allocation of 5%, and the scheme is running quite successfully for last 4 years. And still we have almost half of the shares left for distribution in the form of ESOP. So we easily expect this scheme to continue running for another 5 to 6 years. And then we will see whether how and in what manner we can offer any new ESOP scheme.
Thank you, Amit sir.
I think just to add on to what Amir is saying, Sohail, ESOP, we always consider ESOP to be more of something which people feel that they have a vested interest in the same organization. It's not really that number cannot be large enough to really make somebody ultra rich. So I think the name of the game is to really provide that sense of ownership to our high performers. And obviously, like Amir said, that the allocation was 5%, which we spread over a 10-year period. In fact, it was 10 or 11-year period. So rather than utilizing everything and giving it to people who are currently there when the scheme was announced, it was straddled over a 10, 11-year period so that people can benefit on an ongoing basis. And inshallah, by that time, we'll come up with something different as well.
Thank you so much, Irfan sir. Thank you, Amit sir. Mr. Abbas of DJM Securities is with us. Abbas sir, I have
can you hear me?
Yes, sir, we can hear you.
Yeah, finally. So I do have a few questions. The first one is, as I can see your branches are increasing, but the operating expenses are decreasing. As previously it was 21 billion, and other than that, what is the NPL percentage, and also in which sector? And also, as you can see, the minimum saving rate is there. So what would be the impact of that on the upcoming performance of Mizan Bank? And also, is there any expectations of launching credit cards, as Faisal Bank and also I believe Standard Chartered already introduced credit cards? Last one would be, what are your interest rate expectations for the upcoming year? So yeah.
So one question was branches, number of branches is growing, but your operating expenses are coming down. So maybe Mr. Imran, would you like to take that question?
I
Sir?
think we have already touched upon the decline in the operating expenses a few times. excluding the one-off reversal, our admin expenses have actually gone up by 3.7 billion year over year. The other question from Abasa was around the NPL percentage. Again, that's in the presentation itself. Our NPL ratio right now is 2.5%, and it is primarily coming from the construction and steel sector as well as the textile sector. And the other question was around the policy rate expectations. So, like most financial institutions, we expect the policy rate to stabilize around the 10% mark, and we are expecting a cutoff between 50 to 100 basis point over the next couple of monetary policy committee meetings going up to the end of December 2025. So we would expect it to stabilize at around 10%.
Mhm. Right. And what about the credit cards? Our Bank is going to launch any credit cards in the near future, or is there any plans?
So let me answer it. So yes, this is a market and this is a market demand. There is a different strategy for offering cards. At this point in time, we are offering debit card, which is a big success for us. So we are the largest debit card issuer in Pakistan. We have a largest spend on any debit card scheme which any other bank is managing. In terms of credit card, there are roughly 1.2 million credit card holders in Pakistan, all in all. And if you just remember from Imran's presentation, Meezan has roughly 3.2 million debit card holders. So overall, Pakistan has 1.2 million credit card holder, but Meezan has 3.2 million debit card holders. So
4.2.
4.2, sorry, 4.2 million debit card holders. The credit card market is there. It is a lucrative market. We are working for quite some time with our product development and Sharia compliance team on having a credit card or a financing card proposition, which is not just acceptable and workable for the market, but also approved by our Sharia board without beyond any iota of doubt, because sometimes people have different kind of perceptions, I would say, about credit cards. So we want to be very sure that whenever we come up with a card or a credit card or a financing card, we are absolutely sure that we have ticked all the boxes and we are fully confident to explain the structure behind it to the potential holders of these financing cards. So it is a work in progress. I cannot give you a definite timeline, but I can only tell you that even without credit card, we still have 4.2 million debit card issues, which is much bigger than the overall credit card market in Pakistan.
Mhm. And last one would be, there's a rumor that Mizan just cutted their bonuses as compared to previous one. So is there any truth about it?
Bonuses means bonus shares or employee bonuses?
Yeah, employee bonus, I would say.
No, I think there is no such rumor, at least in Meezan Bank. Maybe in stock market there is one, but I haven't heard that rumor, because the last bonus we announced and distributed was in March 2025, and people were very happy, and it was a very, very significant bonus. In many cases, on an average basis, it was almost close to anybody's annual gross salary, and in many cases, it was much more than their annual gross salary.
Mm-hmm. Right.
Thank you, Basa. Thank you for your
Thank
questions,
you.
sir. Thank you. So, sir, as I'm going through the questions on chat, I can see that pretty much all of them have been answered during either the presentation or the discussion. There's one last question by Mr. Mohammed Kumail of AKD, which is, what is the spread that you earn in the variable JIS portfolio? Can you specify your market share in the trade business market? It's pretty much the market share in the trade business market.
Yes, let me answer that question.
Imran, can you check the number? But the off-the-cuff number, which I remember, that we are managing 10% of the total trade value, both in terms of imports and export of Pakistan imports and exports.
10.2%, yes. So
10.
yeah, we have 10.2% market share.
Thank you so much. So we don't have any further raised hands, and I understand that all the questions in the chat have already been answered now. So thank you very much, everybody, and thank you for joining us. It has been a pleasure having all of you with us, and inshallah we'll see you in our next in our next session. Thank you very much, everybody. Thank you, Irfan Sahab. Thank you, Amir Sahab. Thank you, Imran Sahab. Thank you. Assalamu alaikum, everybody.
Thank you. Wa alaikum salam. Thank you. Assalamu alaikum.